What I want to caution you about is what's coming up for 2027 and beyond, because while I was doing some research for my other channel, Summit Medicare USA, I came across an article on the CMS website where they want to make a few changes which I don't think are going to be very beneficial to many of you. The first thing that I noticed is that they want to increase catastrophic plan coverage, which may be great if you're between the ages of 18 and until something starts happening to you. But what happens is a lot of people enroll in these plans because the premiums are free or very low, and what they're doing is passing a lot of the costs to themselves. So let's take a look at an example of a plan that I pulled up in Georgia for a 50-year-old man making $45,000 a year. So as we get into this plan, I blocked out the logo and the name of the company because I don't want to be liable for anything. I just want to share the information. And if you look at the premium, it's $163 per month, and then the deductible is $9,500. That means this gentleman would be 100% responsible for all of his care before $9,500. Once hitting that, then the plan would split some of the costs until he hits $10,150. And to further illustrate this, as you can see, for the primary doctor, before the deductible, he's paying full price. The specialist, he's paying full price. There is some preventative care benefits there at no charge. However, you have to pay full price for the doctors to perform them. Additionally, for generic, brand name, non-brand name, specialty medications, all full price. So nothing's covered until after the deductible, where it's covered at 50%. Now that you've seen the benefits of this plan, I'm sure you'll agree with me that the coverage is not great. I know the premium is affordable, but it's a fool's errand to enroll in a plan like that, because if something happens, basically you're just going to be in medical debt for the foreseeable future if you do not have $10,150 to cover your max out of pocket. The next thing that I saw that was interesting is that they want to repeal standardized options. Basically, there's some rules in CMS where they had to have the same plan across all the carriers to make it easier for you, the consumer, to understand how to compare those plans. This is going to make it very challenging for you to understand plans with a variety of different plan options and might make it a bit more challenging when you're trying to select a plan. Fortunately, for most insurance carriers, working with an agent is actually free, so I don't know why people try to do it on their own. Additionally, using an agent in your market makes life a lot better because they know who is in and out of network and can better guide you. And did I mention that you're not paying for it? The insurance company is. So this is a tool that you can use and someone that you can contact when you have a problem with your plan. A lot of times people try to contact me to help them with their plan, and because of the rules in the marketplace, it's very challenging to do it because I'm not attached to their plan. So therefore, I have to send them to a 1-800 number where they're speaking to someone who may not speak the best of English. The next thing that I saw that was very interesting is that they want to increase the amount of low deductible, high max out of pocket plans. And I know this looks very seductive because you're going to say, man, I got a low deductible. However, as of today in 2026, the max out of pocket allowed by CMS is $10,600. So if they're introducing these plans, how high will these max out of pockets go? And I just want to illustrate this point by showing you another plan that'll help you understand what we're looking at. Now, this plan that we're looking at is from the same insurance company in the same part of Georgia on the same gentleman that we quoted before. And as you can see, the premium increased to $195 and then the deductible has been reduced to $4,000. And there are some added benefits. So for example, on this plan, he has a primary doctor's visit for $40. However, he's still paying full price for the specialist until he hits that deductible. And then after that, he's going to pay 50%. Now, where it really matters, being that this gentleman was 50 years old, is if he has, for example, an emergency room visit. He's got to pay full price until he hits that $4,000 and then 50% until he hits the $10,000 maximum out of pocket. Same thing for hospital stay and if he were to have a surgery. As of now, this is what's in store for 2027 and beyond. And I think as of now, we as the consumers of health insurance through the marketplace, it may behoove of us to start contacting our representative and tell them that we don't want these specific changes. Because basically all they're doing is bringing down the premium, which is what you see when you're shopping, and then reducing the coverage that you're getting and making an emergency or a health issue more expensive on your part. There were some other interesting changes that I saw coming from that article on cms.gov. However, this video will be way too long to get into each and every bullet item. So my name is Isidor with Summit Insurance USA. I hope you like this video. Give it a like and subscribe if you want to keep up to date with what's going on in the health insurance space. Thank you.